Hi, good afternoon. Welcome everyone to Coleman Report Live. Memorial Day weekend. Lance, Delaney, usual suspects, but we have a special guest. You haven't been on for a while. Thomas Kimsey of Thomas USAF Group, USDA lender. Welcome back, Thomas. It's been, I think, since October last year since we've talked to you. So we always love to hear your insight. You have big news about the program. Welcome back.
Thanks, Joe. It's been too long, so thanks for having me back today and provide some update on where we are with the USDA B&I program.
Let's do the poll first. Let's see who is using the program. Have you ever done a USDA B&I loan? Simply yes, no, and we can get a feel for the audience. There you go. All right. A little bit higher than I expected. 34% say yes, and it's a bigger number than I expected. So we have a pretty advanced crowd when it comes to that. Let's do the second real easy one. Do you use the 1RD guarantee program if you are doing those B&I loans? A little bit half say yes. So Thomas, give us, first of all, explain B&I, what's going on with the agency, and give us an update with the 1RD program.
No, thanks again, Joe, for the opportunity to be back with you today. You know, one of the big updates for the B&I program are, you know, we're essentially out of money. Unfortunately, the program has exhausted most of the $1.2 billion loan authority we've got. We've got a little bit left. The agency's implemented priority point scoring moving forward, so your loans will have to score to get funded. They'll be only doing the funding once a month. But the biggest issue is the demand. I mean, we've got, you know, over $600 million in the pipeline to be funded, and a big number. The good news is Secretary Vilsack appeared before the Senate Ag Committee yesterday. He acknowledged the issue with the B&I program and said they would work to transfer additional resources to fill the gap. So that was good news to hear. I mean, it's still a big hurdle to work on. We're certainly working very hard with Congress and with the agency to, you know, see if there's some additional supplemental funding we can get. So we working very diligently on that.
Is there anything the lenders can do on the call that can help with that? Contact your congressman, or what do you recommend?
No, I'm glad you asked that, because that is one thing, you know, we can all do a better job is to contact our, you know, congressman, congresswoman, and your senators and let them know that the program's out of funds. And the other big item is to have your borrowers, let the borrowers letters. That's really the key, is that their congressional members hear from their constituents that, hey, their loans hung up and they can't get funding because the funds have been exhausted. So, you know, if nothing else, if we can get, you know, our audience to write letters, get their borrowers to write letters, it goes a long ways. And I think that's really what's happened. You know, we've made a lot of noise. Congress has heard from us. The Secretary's office has heard from us. And so everybody knows it's a problem, and they're working diligently to fix it.
Absolutely. I think that's across the whole government guaranteed lending programs.
Sure.
Is utilizing the efforts of the Congress, your representatives. Well, thank you, Thomas. Unfortunate news about the funding being out, but what's on the horizon is I know people are working on it. Can people expect the rest of the fiscal year to be dry, or is there stuff in the pipeline?
Well, I mean, I think one of the good things the agency is doing, you know, we can continue to submit loans, and they will approve loans, you know, and provide conditional approval subject to funding. So that's very helpful to moving forward, as we can continue to submit. We'll get conditional approval subject to funding, and you know, we're cautiously optimistic that we'll get some additional resources. I mean, it is a big pipeline to fill. You know, the other thing that we're working on diligently is to get the FY23 budget, so we've got sufficient loan authority there, and our ask right now is $2.5 billion, because the demand is there. The loans are larger now with the 80% guarantee up to $25 million. So we just need the funds to, you know, help provide access to capital to rural America.
Absolutely, and hopefully you can stick around for the discussion about the OAG report that we're talking about. But thank you very much. Great service to the industry and friends of the show for a long time. So thanks for being back, Thomas.
Thank you.
Let's move on. Delaney, I see that your old man has disappeared on us, but maybe we can.
I don't know what that's about.
Tell us about this monumental OAG report. SBA is saying it's a pay and chase environment, which is quite the quote. So what are they talking about? When was this released? Give us your reporting on this.
So I believe this was released earlier this week, sometime this week, and the OIG was essentially stating that SBA did not establish a sufficient fraud risk framework for this program. They did not have a clear structure with specific roles for the different offices and officials, and they also did not provide a clear set of guidelines for lenders who were reaching out to them with different ideas of fraud and various risks.
Yeah, and we interviewed Senator Rubio, and he was saying that if we didn't get the funds out, that there would be civil unrest and all sorts of horrible problems with the economy crashing. Thomas, what do you think about this report? I know you guys have been involved with the PPP and all that stuff, and you've been just around forever. So what do you think what SBA is saying? I mean, how do the lenders take this?
Well, I mean, I think it's easy for the OIG to, Congress directed the SBA to deploy all this capital and then get it out immediately. So I think the SBA did the best they could in the limited amount of time they had. And, sure, could they have done things better? But, the fact of it is, without the SBA deploying that capital, we could have seen unemployment go through the roof and a lot of additional businesses closed. So the SBA did the best job they could with the amount of time they had.
Lance, welcome back. Can you hear us? Are you?
Yeah, absolutely.
Give us your take on this.
Well, I think the Inspector General's report misses the mark, and what Thomas was saying is certainly something that I agree with. SBA was given a monumental task, and not just in size, but in speed. If SBA had done it in a fashion that would have avoided fraud audit altogether, we might not have done our first PPP loan by today. And we would have had, in a typical program, they walk through all the steps. They jump through all the hoops and ensure that there are protections in that program. But, Congress gave them a giant program and said it needed to be done now. So SBA, I thought, did an amazing job of implementing a program that I really think helped us. Everybody, if you remember the Senator Rubio interview that was posted, Senator Rubio said we would have had huge, just like Thomas said, huge unemployment, tremendous number of business closures, and potentially, we could have been in a depression instead of talking about a recession. So it needed to be implemented quickly, and it was hard to avoid potential fraud. But the other thing I will say, one thing that I felt was correct is as we've gone through PPP servicing and forgiveness, the level of guidance we've gotten on how to deal with issues in fraud, how to deal with issues, with PPP borrowers, there's not been as much guidance as we need. And we have had to create or figure out or, construct methods of dealing with problems as we've gone along. So, again, I think there's some things in the report that certainly have merit, how much guidance we've been given in dealing with fraud. I mean, we just had to kind of figure it out. But again, I don't think you can blame SBA for the fraud. As big as the program is, as quick as it went out, and honestly, guys, it's still a very minor percentage of the overall money that was put out into the small business economy. the fraud does not represent huge numbers. I mean, there are a lot of it because it was a huge program, but it's not big in terms of percentage.
And this second recommendation, Delaney, I think you'll agree, is that the guidance we did receive was it wasn't as timely as some lenders wanted it to be. We had to spend a lot of time on this show, Lance, if you remember, in April 2020. We were talking about this daily, and we didn't have much to go on. So, Delaney, what's the second recommendation that they're offering?
It was to give very specific and sufficient guidance to the lenders. For both of these, the SBA responded saying, they have worked on this throughout the entire process of PPP, but for both of these recommendations, they plan to finish it and meet the OIG standards by the end of this fiscal year.
And we have Richard has a great comment. He said, Mnuchin literally said, if you apply to your bank this morning, you should be able to get the money today.
Oh, yeah. Hey, no,
what the lenders were dealing with.
Well, another thing is complying with what the OIG is asking for by the end of the fiscal year. Now, we won't be complete with PPP. I heard a comment at Nagel where they were saying it's in our rearview mirror. Those of us working servicing and forgiveness can tell you it's not in the rearview mirror yet. But I would say as we move toward the end of the year, I'm not real sure how much the guidance is going to help us because most lenders will be pretty close to complete.
Absolutely. Let's move on to the last couple stories. Delaney, I'm going to bring you back. This attorney gets 5 years sentence for a bank fraud scheme. Tell us about what Tiffany Russell did.
So Tiffany Russell, along with, I believe, 2 other people, they were applying for credit cards and loans with, no intention of paying them back. In addition, they created false aliases and gave false documentation. I believe they obtained $2.5 million from 12 different financial institutions and SBA. They also later ended up, or at least she ended up later applying for a CARES Act loan. It didn't specify whether it was PPP or an SBA loan, and I believe this would have happened after she was already indicted for this previous fraud scheme. So it was a long history of fraud, started in 2016, and once again, we saw some interesting purchases. Are we ready for the list?
Oh, yeah.
Go ahead, Lance.
We have a beach home, plastic surgery, a BMW. From what I can gather, it looks like 8 different properties. So there was quite a bit.
So one thing in this story that I find interesting, guys, is she got some of the debt removed from her credit history by saying she's a victim of identity theft. Now, one of the interesting things about working PPP forgiveness is the massive number of phone calls. I don't know if there was a TikTok video or what, telling everybody, hey, call them up and tell them you got, taken advantage of, that the information is fraudulent. Now, it makes it difficult to disseminate between the real fraud and the fake fraud. But, in our walk, we have what we talk about. It's called boyfriend or girlfriend fraud, where somebody calls up and says, my girlfriend got a really big PPP loan and she shouldn't have gotten it. And I'm like, well, can you tell me why I should believe this? What information you have? And they're like, well, she broke up with me the other day and all of a sudden she's got a new car. And I'm like, what tells you? Anyway, it's so I mean, when I see this story, it rings home with me the tremendous number of phone calls that we get. And that's the hard part about fraud and PPP, guys. You don't know what's real or what's not real.
This is an incredible sentence, 15 years for $11 million PPP fraud. That is just an enormous sentence. What did Darrell Thomas do? 14 PPP loans, Delaney. I mean, incredible.
You know, this is an interesting story. I think I've actually seen this. Of course, not a sentence, but I've looked at this story before. They're claiming he was the mastermind of this big scheme. He applied for at least 14 different loans, each spanning about $700,000 to $850,000, claiming that these businesses were in operation. He had employees, payroll expenses, with all the false documentation. Of course, none of this was true. And I believe he transferred $5.5 million from the PPP loan proceeds into his own personal bank accounts. In addition, there are 23 other people who are either sentenced, pled guilty, or somehow caught up in this.
Wow.
Yeah, I mean, we've been covering fraud in SBA for years, and that's the highest sentence I've seen in a long time. I think I've seen 17, but 15-year sentence is no joke. So, well, on that note, let's what are we talking about in the next couple of weeks? We want to talk about eligibility, Lance. When should a PLP lender process GP? We're going to be doing this on Wednesday, June 8th. If you want to sign up for that, send me an email. But give us a quick teaser, Lance.
Well, I think that it's always a difficult question for a delegated lender figuring out why and when you should process a loan using GP versus using your PLP delegated status or even Express. And there are times when it's appropriate. So we're going to talk about some of the issues that come up in underwriting and approving an SBA loan that would tell you as a delegated lender, hey, this one needs to go to Citrus Heights. This one needs GP processing. And I think we all want to know when's the right time to send it to SBA versus just approving it ourselves.
Excellent. Well, Thomas, thank you. It's excellent to see you. Thank you for your update. We are off on Monday due to the holiday. We will see everyone next Friday for Coleman Report Live. Thank you for joining us. This concludes today's show. Have a nice weekend.
Have a good weekend.
Have a good weekend.